that an auditor had signed some of the financial statements and that auditor was dead.
So he was signing from the grave?
He was signing from the grave.
Wow.
Yes. Stay tuned. This episode has been sponsored by Lightrig Media, cameras, microphones, lighting, and our makeup artist Samba. Shout out to you.
Amazing job.
So there's a compensation structure that comes with the deposit guarantee fund in case your SACCO goes under. The unfortunate bit of it is if I have 5 million in a SACCO and then the SACCO goes under, I am only entitled to a compensation capped at 100,000. So I might not be able to recover everything.
Yes.
Sometimes a drop in the ocean, but that is what the deposit guarantee fund is meant to do. Hi guys, welcome to the rundown. My name is Mihala Barasa.
And I'm Danunz Yuko.
And today we are going to talk about SACCOs. Who is protecting your money? Is your money in a bank? Is it in a SACCO? Is it under a mattress somewhere? Are you following just IV and investing? Where is your money? So this is for our SACCO people.
I hope at the very least
it's not under
MMF. At the very
least it's in an MMF.
Yes. Yeah. Okay, so before we dive into today's episode, please, if you have not subscribed to our channel, please subscribe, hit the notification bell, and stay with us throughout the episode. This is a knowledge platform. And today, as Mihala has mentioned, we're going to be talking about SACCOs. Hold on.
We learn together and
we grow together. Mihala is so jazzed by that.
I am. Like it should be on a t-shirt. The rundown.
We learn together, we grow together. I love it.
Est 2022. Anyway.
Thank you. Okay. So I like how you've captured that topic, that who is protecting your money. So last year, there was a very big scandal surrounding KUSCCO. And everyone was asking, is our money at the SACCO safe? And I think one of the places where a lot of Kenyans, whether in the rural area or in the urban centers, most people save their money in the SACCO.
Yes.
Because even when you're employed, most of the people in the welfare, have you ever noticed that when you join a company, the guy for welfare usually comes.
They'll be like, hey,
we have a SACCO.
We have a SACCO. The SACCO. Someone did that to me the last time. I've been employed for like a hot minute, like maybe going to my third year. Okay. But someone stopped me and asked me, like, are you a member of a SACCO? I was like, yes. I have a very vibrant SACCO. Like, which SACCO is it? Then I mentioned, like, you're not saving with us, like your employer. Why is the SACCO of another employer? But yeah.
So that goes to show, you can imagine if maybe 50% of employed Kenyans are in a SACCO, how much money is within that sector?
Yes, the SACCOs.
Yes. Even the current cabinet secretary of cooperatives said that Stima SACCO is bigger than some of the banks that we have.
See?
You can imagine.
Yeah. But I think the one thing that we don't mention enough about SACCOs is how it's literally the one financial institution that trust is very high in. And like in financial services, once trust is lost, that's it. That's what led to the falling of the banks that we have here. Like people lose trust in you and that's it.
There's a bank run and people go to withdraw their money and it collapses.
Exactly. You see, like, for example, a SACCO, let's say we're working in the same organization, it's called Blue Seats. They have Blue Seats SACCO. I am working with these people every day. I know them. Maybe our SACCO is in an office somewhere behind where we all already work. It's like I have a frontline view to my money.
Yeah.
And a lot of SACCOs people join through referral. So you remember when you referred me to Kanisa?
Yes,
you refer someone to a SACCO, then they join the SACCO. So you're like, I'm able to trust this SACCO because my friend or my relative is on it.
Yes. That makes sense actually. And the interesting thing is, for you to get a loan, you need to get guarantors to sign for you. So that also, the trust element is quite high.
Yes.
Because if I sign a loan on your behalf, it means that if you default, my deposits are at risk.
Yes, they're at risk.
Yeah. So, as Mihala has mentioned, SACCOs require a lot of trust. Okay. So there has been a lot of talk on social media. So before we get to the amendment bill, probably we can go into what happened to KUSCCO. Yes. What happened to KUSCCO?
Okay. I'd like to take this one.
Yes.
So do you know what KUSCCO means in full? Do we know what KUSCCO means in full? Even I am not sure I know, but I'll read for you. So KUSCCO is the Kenya Union of Saving and Credit Cooperatives.
Okay. Kenya Union of Saving
and Credit Cooperatives. Literally like KUSCCO. Like it does make sense that's, So that is what it means. And last year, I think we saw one of the biggest scandals to ever happen in the SACCOs in Kenya.
Yeah.
They were saying that the fraud was estimated at 13.3 billion Kenya shillings. More SACCO scandal yenye kwa more than pesa ya NYS yenye iliibiwa. Like SACCO walipoteza pesa kupita governor wa Kirinyaga. Like imagine governor wa Kirinyaga na ile scandal yake ya health.
If I didn't have
in NYS na those two scandals.
Not to digress, but it's so someone was saying when you look at the scandal that happened with the fuel, the recent scandal where we have a PS CEO of KPC and CEO of EPRA resigning
at the same time.
The saddest thing is we are probably going to see one of them or all of them heading another parastatal in
the very near future.
Yes.
There's going to be an appointment.
Exactly.
Or a hiring.
And they're going to end up somewhere. And it's so sad that someone can be in an organization that had questionable dealings. There was corruption, high levels of corruption in the company or the ministry, and then that person comes, vies for a seat.
Ni kama anaoga alafu anarudi soko.
Imagine. We're like
na anachukulia na endi side ya vitungu, ya broccoli. Like the side for fancy and the side ya chocolate.
And then the Whole Foods.
Like endi side, like honestly, endi side ya perishables hata. It doesn't make sense.
You've said that and I've remembered. Hey, by the way, it's quite sad. As Kenyans, as 2027 happens, let us not elect people who have been involved in scandals.
Do better.
Let's do better. All right, please continue.
Okay, so we had digressed.
Yeah.
The scandal was worth an estimated 13.3 billion Kenya shillings. And what did this mean for our money? This means that because of that scandal, they exposed the money that is invested and saved by 247 SACCOs in Kenya at risk. Because SACCOs could very easily lose their deposits. And if the SACCOs lose their deposits, everybody kind of loses their deposits. Or like you lose a massive amount of it. This also meant that the organization was left almost insolvent or basically declared insolvent. And this meant that because this means that obviously they could not service the debts they had. They could not the company was not, you like to say, growing or going concern.
It was not a going concern.
Yes, that one. So the company could not be able to pay for its operations at that point. Actually, it's a cooperative. It could not be able to, the union could not pay for its bills. Why or what was the cause of this scandal? I think those are some of the things we need to look at. The first thing is they were using cooked or altered or fraudulent financial statements. So there's need for reporting. There's need to report profits, report losses. KUSCCO was reporting profits while they were incurring losses. Then there was also concealment of expenses. So you've used money to do this and do that and do that, but that information is not coming out in your financial statements. When you send your financial statements to investors and to SACCOs, it's not showing those amounts of money. There was also a lot of forgery going on. Actually, the most interesting one for me was that an auditor had signed some of the financial statements and that auditor was dead.
So he was signing from the grave?
He was signing from the grave.
Wow.
Yes.
Okay.
And then there was also literal theft of funds. So one of the things that was happening is money was going missing and some of the SACCO officials were borrowing loans from member deposits, and the money was being transferred to their personal accounts, and they were not paying that money back. So all these things kind of led to the quote unquote almost collapse of SACCOs.
Yeah.
Obviously, there's the obvious things that Kenyan companies do. You know, I have inflated a bill here and there. There's someone that has received a kickback. Obviously, there must have been conflict of interest issues, but these were not really. I cannot say these two are really proven, but the financial statement fraud was very high.
Yeah.
What was the aftermath? The aftermath of it was, I remember, it was sometime last year still. People were arraigned in court for conspiracy to commit fraud. I think they arrested almost 23 officials of KUSCCO because of this whole stealing of money. Now, what did this mean for SACCO members? Because, as Ndanu said, SACCOs have millions and millions of Kenyans. So many SACCOs had to write off losses, reduce dividends. I was just telling Ndanu today that my SACCO gave me a dividend of 7% this year. We should have been getting 10, 11%. So that extra 3%, I think, is what was used to cushion our SACCO against some of these things.
Yeah.
And then a lot of other SACCOs either reduced their lending margins or increased their interest rates. So they tightened lending practices just because our cooperative that where we put our deposits have decided to play with our money. Now the SACCO members have to suffer because of these issues. I really ask myself and wonder how SACCO AGMs went this year. They must have been very tough.
Did you join yours?
I didn't join mine. Where was I? I think we were shooting. We were shooting during our AGM.
I joined ours, the SACCO you left me at.
The nice SACCO.
It was okay. I think not most of the big SACCOs have found a way to provision the losses that have gone because of KUSCCO. The government is also trying to recover some of the money. So some SACCOs are hopeful that there'll be recoveries. But in the event that there's no recoveries, a lot of the SACCOs are trying to figure out a way to cushion the way you've said, like your SACCO. There's a certain percentage of the profits that's going towards cushioning the SACCO from the losses that happened with KUSCCO. But also, remember, the economy has been tough. I know the economic indicators don't necessarily show it because inflation has been below 10% for the longest time. Actually, it's been around below 5% for quite a while.
Yes.
So you find the economic indicators are showing that the economy is expanding, but the actual situation on the ground is a lot of people don't have money. Then there was also what happened last year was we had a lot of NGOs being wound up because of the US policy that the Trump administration gave. So besides KUSCCO, there's actually a lot more impact on the SACCOs besides KUSCCO. So imagine already you've lost money from the union. And then on top of that, your members don't have money.
They withdraw.
Yeah.
They either withdraw, they stop paying,
they
stop paying the monthly contributions.
Yeah. So SACCOs are actually in a very tight spot. So even when you see the dividends reducing, it's because of
some of those things.
Those things, yes. Okay. Yeah. Okay. Thank you, Mihala. That was a very, very nice breakdown of what has happened. Currently, as I had mentioned, the government is trying to recover some of the money. They're trying to sell the assets that KUSCCO had to recover.
But our friend works there.
You didn't see KUSCCO was put under statutory management.
Oh my God. No, I know they did. They were, but now I'm just thinking back. I'm like, our friend works there.
Yes.
Maybe I should reach out.
Yes, you should. So KUSCCO, IRA put KUSCCO Mutual Assurance under statutory management. And from there, they're trying to sell about 60% of the stake of the insurance company to now private
Private
on-
insurers.
yes, or individuals who may want to buy
Okay.
a stake of the insurance company, then that way they would be able to compensate the
Some of the
SACCOs. Yes. Sometimes it's easier to just buy an already ongoing business instead of starting from scratch. So remember, like Branch, they bought a microfinance bank.
Oh, they
It was-
did?
Yes. It was called Century Microfinance Bank.
I don't even know about it.
I know, even I
Yeah.
also didn't know it. But so that makes it easier for you to, instead of setting up your operations from scratch, you're at least starting from somewhere.
From somewhere. Like you don't have to do the groundwork of
Yes.
I have to look for a license. Then I have to prove myself. And
Yes. Then I have to hire people.
I have to hire people.
Then I have to get management information systems.
I have to get stage pure and
I know. You remember?
let me tell you.
Woo! Insurance. One day we will do an episode of our insurance days.
Yeah, but we need more people. Who do you think would be willing to come to the channel to speak about it?
To speak about insurance. Well, okay. I think there have been a lot of questions about life insurance. So we need to get someone to come talk about life insurance and trusts. Then now probably we need to get, I don't know, are we able to get Njeri?
Who's Njeri?
The CEO for Jubilee Health.
Oh my God.
Njeri.
I also have another good friend called Njeri. I was like,
Oh, how do you not?
I know Njeri. I see her on LinkedIn a lot.
Yeah, like to tell us how insurance companies work.
I think well, I just
It would be.
but I think my former boss would have been like, one of the things I used to appreciate about her is how she spoke about insurance.
Yes.
Like you could
She knew
tell
her stuff.
you could tell she knows and loves what she does.
Yes.
That was like one of her few redeeming qualities. She really just did know her stuff.
Mav cut because I can't stop laughing.
Unataka wanizimie mic kama Senator Meth. Sinizimie mic kama Senator Meth.
Okay. Yeah. So hopefully, once the government has completed with winding up of KUSCCO and selling its assets, then probably some SACCOs will receive.
There'll be some recovery.
Yes, but I don't think it will be
much. Exactly.
Yes, or 100%.
Yeah, it won't be 100. Definitely won't be 100%.
Yes.
But those people are supposed, if prosecution should go end to end, like those people are not supposed to get out anytime soon.
Yes. Actually, and SASRA had actually sent a directive to the SACCOs to tell them to have provisions within their group, within their financial statements, yes, to write off some of the
debts.
Yes, from KUSCCO. Yeah. Okay, thank you. So we've talked about KUSCCO, and of course, it's very sad that has happened, and you can imagine the impact of someone's savings. Maybe that's just the only
money you're saving.
You're saving, yeah, that's in a SACCO. Okay, so the government has proposed a new bill, the SACCO Amendment Bill of 2025, and there has been talk on social media.
You're going to lose your money.
Yes, like the government
must go is coming to talk. Did you find out who Gen Z Buddy is?
No.
Did you find out who Gen Z Buddy is from our previous episode? I'll send you her profile.
Please.
She never calls our president by her name. She usually calls him Must Go. We're like, Must Go is going to take our money.
Yes, because I think one of the things I've seen on social media is people saying they're trying to create a central bank for the SACCOs. Okay. So are we going to dispel or
are we going to confirm? Stay tuned. This episode has been sponsored by Lightrig Media, cameras, microphones, lighting, and our makeup artist Samba. Shout out to you.
Amazing job. The SACCO Amendment Bill, at the time of shooting this episode, had gone for its second reading in Parliament. Okay. Then it's the public participation for it
is ongoing,
and it should be closing on
24th of April 2026.
Okay, so by the time this episode is going out, it will have already
closed. Yeah.
Yes. But we are here to educate you on what this what
The amendment bill
what
contains.
Yes, because once, if it is passed, then it's good for you to know what that means for you and your SACCO.
And your money.
Yeah. Hey, money is upper. Where people don't want people to, you don't want people to mess with your money.
No way. We don't want someone to pull wool over our eyes or pull the carpet. I'm trying to use metaphors. The rug from under our feet or whatever they say.
Yes. Okay. Thank you, Mihala. So let's start with when you were going through the amendment bill, what are some of the key changes that you saw or new proposals that you saw?
I think one of my thoughts around it as a SACCO member was, what is the objective of the bill? So one of the main things I was looking at is, even before I get into the details of it,
yes,
what is the objective of the bill? From a look at the proposals, one of them is just to strengthen regulation of SACCOs. Well, before we started this episode, I was telling Ndanu that I think SACCO is a baby of chamas and table banking.
Yeah.
It's just a very formalized and sophisticated form of table banking. So I think the way the government is thinking about it, and the way the SASRA is thinking about it, and the way even the SACCO leadership thinks about it is, how do we regulate it to get it to a place of not over-regulation, but not too little regulation to the extent that people get away with 13.3 billion shillings like the KUSCCO deal.
Yeah.
The second thing when I was looking at it, I thought, some of these provisions look like they are seeking to protect member deposits.
Yes.
So making your money safer than it is. The third thing is, there has been so much loss of trust by the public in financial institutions. Actually, the thing about SACCOs is, you don't just wake up and join a SACCO. It's not like a bank that you can walk into a bank and say, I want to be a member of KCB, and banks have to heavily advertise. SACCOs actually don't heavily advertise.
Yeah.
It's usually that I know person X, I trust them, I trust their judgment, I'll join their SACCO. And sometimes it's the converse. You're like, your SACCO iko na person X, I can't join that SACCO. That must be a dodgy SACCO. So I think the regulation again is coming in to try and restore that public trust that KUSCCO has made us lose. And then when you look at the existing SACCO laws, for there to be a situation where 13.3 billion shillings is being lost over a period of 2014 to 2025 without much notice, that means that there's a lot of regulatory loopholes.
Yes.
So the amendment bill tries to close some of those regulatory loopholes. Capish?
Yes.
Okay. So then I could go to the first key reform that I found. The first one is the Deposit Guarantee Fund. So the SACCO Amendment Bill of 2026 introduces the Deposit Guarantee Fund. And what the Deposit Guarantee Fund does basically is to assist to protect the savings of members if a SACCO collapses. So this is kind of similar to bank deposit finances, where there's storage of some money that actually allows, if the bank goes under, then people can be able to either get their full amount or part of the amount. I think this is the function of the Deposit Guarantee Fund. So the function of the Deposit Guarantee Fund is basically to assist members have some sort of deposit protection. And why is this important? SACCOs do not work like banks. So most SACCOs will have you'll have a share capital. So some SACCOs will tell you can have a minimum share capital of like 10,000 shillings. And then they'll have this deposits that you put in the SACCO that you never withdraw unless you're leaving the SACCO. So the more deposits you have in a SACCO, the more dividends you get. And you don't get to lose your deposits really, or you actually never get to lose your deposits. You just, ni kwenye tu unaeka tu pesa. You can recover it if after 10 years, maybe you say, for me at retirement, I need to have had like 20 million in the SACCO. When you retire, you can say, okay, I'm closing my account, give me my money. So there are people in SACCOs that have maybe as little as 2,000 in their deposit accounts. There are SACCOs where people have probably hundreds of millions. So you see, if the SACCO goes under, then that means you lose your entire life saving. So that is what the deposit guarantee fund comes to do, to kind of protect that investment. Because the reason why we deposit in SACCOs, we're like, the risk is really low. My money will almost always be there unless people do stupid things like what people are doing with KUSCCO.
Okay. Yeah. Makes sense. Thank you. So looking at the new bill or the proposed bill, we are seeing that SASRA is going to be given like more power, more supervisory power. So the SASRA is the key regulator when it comes to SACCOs. And the interesting thing that about SACCOs is, so there are SACCOs and there are cooperatives. So there are those that are registered under SASRA. So there are those that have a SASRA license, and there are those that have license from the Ministry of Cooperatives. But SASRA reports to
the Ministry of Cooperatives.
Yes. So it's all
in one place.
Yes. It's just that now they are trying to like clean it up to ensure that everyone is being licensed by SASRA. Everyone is now under the authority. Yes. So now everyone is, so SASRA has now the authority to go even to cooperatives and see, okay, how are you guys
operating?
Exactly. Okay. Yeah. And it's, I think, as you've mentioned, some of these changes are actually here to protect depositors. Yes. So that you don't lose your life savings. Of course, there's a risk when you invest or save your money somewhere that there's a likelihood of losing. You may not get it back 100%.
Yes.
But at least you're not losing.
You can get something. Everything. It's not like a pyramid scheme.
So probably one of the most basic or interesting things that has been put in the new bill is the minimum membership.
Yes.
So you're going to have a minimum membership of
1,000 members.
1,000 members. So that means that if there is any SACCO that has less than 1,000 members, then they need to either get more members or merge with
another one.
Yes. Okay.
Before you go to the next one, there's something I failed to mention about the deposit guarantee fund. So there's a compensation structure that comes with the deposit guarantee fund in case your SACCO goes under. The unfortunate bit of it is, if I have 5 million in a SACCO and then the SACCO goes under, I am only entitled to a compensation capped at 100,000. So I might not be able to recover everything.
Yes.
Sometimes a drop in the ocean, but that is what the deposit guarantee fund is meant to do.
Anyway, I was going to tell you, I have never told you the SACCO where we used to work, after it went down.
Did you get your 6,000 shillings back? Nada.
Sasra, do something. I got zero bob. Zero shillings.
My former boss used to say zero bob.
That's zero bob. Hey!
Marvin, letter tissues.
Thank you very much. It's been quite a
journey. I think we've lived the lives of 600 people with that employer. Imagine, like, how, anyway, we'll talk about that employer. Reject. Mungu siye tupeleka hapo tena.
I know.
Only prosperity. We've already seen enough. We can't see anymore.
We
can't get any worse.
Okay. Based on the fact that at least one of us here has lost money from a SACCO. Probably you can tell us about the Central Liquidity Facility.
Before we go there, Kimbelembele ilikuwa ya nini? Kanisa SACCO is a good SACCO. Why were you diversifying? Like, not anyway, it's fine. Like, we'll have that discussion off channel. Like, wase. Wanasemanga, choose your friends wisely. At this point, I'm really doubting my wisdom.
What do you
I am really doubting my wisdom.
Like 3/4 of the company were members.
True. I wasn't. You didn't need to be. What do you call una foreshadow anyway? Anyway, Central Liquidity Facility. From my analysis of what the Central Liquidity Facility is and what it does, I think, to me, it looked like it's one of the most transformative items of this amendment bill. So this is kind of like a pooled fund that is contributed by SACCO, probably basically what KUSCCO was doing. Anyway, so it's a pooled facility of funds that are contributed by SACCOs. What it does is now that will help provide short-term loans to SACCOs, not SACCO members. It will provide short-term loans to SACCOs. Short-term, I'm thinking maybe 0 years, maybe number of months, maybe 2 years, I don't know.
Yeah.
And then whenever there are inter-SACCO transactions, this is what helps them. And then also, it's also supposed to enable SACCO participation in national payment systems. The way we are speaking about SACCOs right now, it's like the country's payment system, or even just the general legislative system, doesn't really properly recognize SACCOs. So one of the things that the Central Liquidity Facility does for SACCOs, it enables the SACCOs themselves to participate in national payment systems. And what does this then mean? It means that they get into the purview of mainstream banking. So one of the other legal consequences of this facility is it gives the SACCO some sort of lender of last resort. Ile yenye SACCO kama wamefika kwa mwisho, then whom do we ask for money? Then they go to that liquidity. So it's almost similar to the support system that the Central Bank of Kenya gives to banks. This is what now they are seeking to do for SACCOs, because as you can see, even with KUSCCO, they didn't have that mechanism. They didn't have a place where they can say, this is if I have an emergency, this is where I can borrow.
Yeah.
But also look at it from the perspective that this is also prone to abuse. I can have emergencies every 3 months. Yes.
True. I get you. Okay. Thank you. So now you know where the story around they're creating another central bank
CBK is coming
for SACCOs, where it came from. Okay. So the other area that the new bill is proposing is to have every SACCO needs a management information system. So basically, a management information system is a digital, or rather a software for managing the SACCO, the operations of the SACCO
and financial reporting.
Yes. So everything needs to be documented within that
digitally, albeit.
Exactly. So the records of your members, your financial statements, credit, how much deposits do people have, shares, credit, everything needs to be within the management information system. Yeah.
Do you think it needs to be a software per se? Or there are those smaller SACCOs that will now start using Google Sheets because they say it's digital? I'm just asking.
So I think it has to be a software. And there's a proposal to have shared,
a shared management information system.
Yes.
Okay.
One that different SACCOs can subscribe to.
So it's uniform.
Affordable, yes.
Okay.
Uniform.
Okay.
Yes. Yeah. The Google Sheets is okay.
But it's not transparent.
Yes. And it's also, when it comes to using of Excel or Google Sheets, it means you have to put a lot of controls.
Yes.
You have to lock formulas.
Don't view only.
Exactly.
Comment or status.
There's so much you have to do when it comes to Excel to avoid manipulation. Yes.
And then there's also the concept of who owns the document.
Exactly.
The ownership of the Google Sheet.
Yeah.
Who will own the one that has the members? Who will own the one that has the money? Who will own... Yeah.
All that.
That
yes.
as well.
Because even with the good thing about systems is normally systems have audit trails. So for example, if you join a company today, you join as their legal manager. So as the legal manager, then if you're reporting to the CEO or you're reporting to a head of company and corporate services, then that person will say, Mihala, our legal manager, needs access to this system.
Yes.
And this is the access she needs. So probably if you're looking at legal exposure, you only need read-only rights. So you don't need to read and write.
Right.
Yes, you only need read-only
rights.
Rights for you on the system. So that then puts adequate controls because we know these are the people within the company who have rights
edit rights,
yes,
read only rights,
exactly,
commenter status, no rights at all.
Exactly.
Actually, that anyway, that I digress. That helps.
Yeah.
Because in some of the fraud cases that I've handled, it's usually like Ndanu doesn't have edit access yet.
Yes.
Somehow she managed to edit this document, or like she edited this thing in the system, or she managed to add or remove. Yeah.
And there's some things like, sorry to digress, but there are things when it comes to cybersecurity and data protection controls that are said by compliance or risk department or IT, and we are normally like, mnatusumbua. The simple thing of when you step away from your desk, lock your screen. Because there might be someone, because the world doesn't have saints. Everyone is not a saint. So there might be someone who's waiting for you to step away from your desk to come and make an approval that you only have
a payment. Yes.
Yeah.
To approve a payment to themselves.
Or something. Just to amend something, and it changes the whole reporting of the company. So you have to be very careful with who has access to what, and ensure that when someone is given access to certain data, they understand they need to protect it. Yes. Okay. So tech is opportunity for you guys.
Because what the question we're asking ourselves is, will smaller SACCOs be able to afford this management information systems? We understand that the goal is to enhance transparency and accountability, but will we be able to afford it? Do you have an affordable solution? You can start floating it out there, because it looks like this bill is coming.
Yeah.
Okay.
So
maybe I can
take the next one.
Yeah.
Yes.
Maybe I can take the next one. The other key reform under this amendment is the bill gets a bit strict on governance reforms. One of the things that I shout out to Maureen Abuti, the HR of Cigna Health. She sends me their fit and proper forms every so often for me to sign for them. So one of the things that insurance company does is they sign this thing called a fit and proper form.
Yes.
That goes to the regulator to kind of confirm that you're what I want to say fit and proper, but that's not the right word. Like
they want to confirm that it's basically like a due diligence or background check that's done within the financial sector. Central Bank do it, Capital Markets Authority do it,
IRA do it. Yeah.
Yes. So now SASRA is going to have the powers to do it.
Doing it.
Yeah.
So that form talks about whether you have corruption cases pending against you, kind of just like confirming you've not been involved in any fraud, kind of confirming issues of policy. So they're going to mandate, I think, leaders and board members of SACCOs to sign those forms. The beauty of signing
so it's going to be management and board members.
Yes. One of the things that I like about that particular exercise, it might look like a tick the box exercise, but the moment one of your managers is found in a corruption scandal or like becomes unfit and improper, then the authority can tell you, look, but you signed and said that they were okay. They can hold you to account and they can hold the manager to account. And then
that also helps to ensure that someone didn't come from KUSCCO and then now they're heading another SACCO.
You are lending unit.
Imagine.
You are loans and lending unit. Yet they still have a loan from SASRA.
Or they still have a pending criminal charge.
Yes. Yeah, exactly. Because it also talks about charges.
Yes.
The other thing that the governance reforms address is it restricts insider lending. Can you talk to us about insider lending?
So insider lending is it's where you give loans to officials. So, and that's what happened like with KUSCCO. Yeah. So you find that a lot of the non-performing loans, when PwC did the forensic audit for KUSCCO, was loans that had been
disbursed to
KUSCCO.
Management.
Yes. Yeah, the management of KUSCCO or management or board members of SACCOs. Yes. And knowing very well, we're giving these people these loans and these people know they are not going to pay those loans. So now that sort of, you've called it
insider lending.
Insider lending. Sorry. The insider lending then now it is going to be curtailed, because whenever it comes to things like borrowing, there's the underwriting process that goes to it. Yeah. So you cannot now just give loans
the way you want.
Yeah.
Without assessing the risk.
Exactly.
Good. Mumesikia insider lending ni nini? Musiniulize tena. The other thing about the governance reforms is there's going to be a controlled dividend distribution structure. This one worried me a little bit.
Right.
And I'd need to understand it a little bit more. Does this then mean that maybe our dividends are all given at the same time, and maybe there's a cap as to how much or how less a percentage of the dividends that can be? I think that remains to be seen with the implementation of the bill.
Okay.
And the last of the governance structure was the reduction and limiting of conflict of interest. Now, I find conflict of interest in organizations tricky, because for a lot of organizations, once you declare it, that's it.
Yeah.
Like, they don't do anything about it. But going ahead and saying, like, if there's a conflict of interest issue, this person should resign, this person should not be involved, this is a criminal activity. If there's a conflict of interest, again, going back to SASRA, I think that's a good thing for SACCOs, because again, like we said, SACCOs are based on trust.
Yes.
That then means that even however much we might want to refuse or reject it, our board members for SACCOs, our leadership are people that we trust from organizations we know and we've interacted with. So it's very easy for you to say, okay, Ndanu is my friend. This insider lending is just once. She'll pay it back. It's harder for banks to do that, because they get outside professionals to come and do the jobs. For SACCOs, you are the legal officer for your SACCO, like, because you work in the organization and people know you. So it's very easy to be involved in conflict of interest transactions.
Okay.
Yeah.
Conflict of interest. Do you remember we have a Conflict of Interest Act?
We do.
Yes. Anyway, now we've mentioned that SASRA is going to have more supervisory power. So SASRA is going to take on the risk-based supervisory approach. So that has already been implemented. I think Central Bank of Kenya was the first to implement. The Insurance Regulatory Authority, the Capital Markets Authority, they all have a risk-based supervision approach. So this means that they're going to be having active monitoring of the SACCOs. So SACCOs are going to have now, they're probably going to see increased reporting. So one of the things you'll see within the other financial services companies is there's normally a monthly submission of management accounts to your regulator. So that usually shows where are you in terms of your capital adequacy, where are you in terms of your liquidity. So the regulator is able to monitor on a monthly basis which are the financial institutions that are doing well, which ones are the ones that
Are
not doing well. In risk terms, we'll probably call it a key risk indicator. A key risk indicator is an early warning sign. So when the regulator gets regular reporting, they're able to see how well your firm is doing.
To place you in terms of the level of exposure and risk.
Exactly. So you remember when we were working in insurance, there used to be a report from the actuarial team that used to be called capital adequacy ratio. So then that would show the regulator in terms of the required minimum capital requirements against the risk you've taken on as an insurance company. Where are you? Yeah. And then they would be able to tell, okay, you're not at 100%. You need to increase to do better your capital base to get to 100%, or you need to take on less risk. So they're able now to actively monitor how the company is doing. And as we've mentioned, now the minimum capital requirements for SACCOs are not going to change. It's going to be 10 million, but now they must have a minimum of 1,000 members. 1,000 members. So the SASRA is going to be monitoring some of those things to see, okay, are you within your minimum capital requirements? How is your liquidity? How is your lending? Your non-performing loans? What percentage of your book has non-performing loans? do you have, now they'll also be checking things like the insider lending. Do you have loans that you have given to your officials, and when you gave them the loans, was it within the correct procedures followed? Yeah. And then now they can even come for inspection.
They should. Sasra.
They'll be coming now for inspection. So a lot of times when a regulator, so inspections, it's usually different. So there are times the inspection can focus on operations. There are times the inspection can focus on your financial statements. For banks, probably there are times it will focus on how are you underwriting your loans, things like that. So each time the regulator is visiting you, they check a certain area. Yes, for assurance purposes, basically.
That's interesting.
Yeah.
Sasra was not doing that, I presume.
I guess so. And that is how we got to where we are.
Jeez.
Okay. So as we wrap up the changes within the governance structures, the bill now brings some control or oversight over the secondary will we call them secondary cooperatives or secondary SACCOs?
SACCOs or financial services structures under the SACCO Societies Act.
Yeah, so where it's like a collective of SACCOs. So that means that if we have created our association of several SACCOs together and we want to lend each other and we want to help each other, it means that we need to inform SASRA about it. Yes. So that whatever we are doing, whatever union we create or whatever cooperative body we create comes now under the oversight of SASRA.
Yeah.
So basically what SASRA is looking for is increased transparency and to know exactly what's happening. I see a lot of times as, since I am lucky enough to do 2 jobs.
Wow.
So risk management and regulatory compliance. So one of the misconceptions I see about regulatory compliance is a lot of times people feel like you're telling the regulator too much. But do you know it's advantageous
to tell the regulator too much?
Yes. It's more advantageous to be transparent. Yes, because they trust you. They know you have nothing to hide. But if you're the type of organization that doesn't give information to the regulator, they don't know what you guys are doing. They have to come for an inspection to know what products people are pushing, how your company is performing, then they don't trust you as much. Yeah. And it's very good if a regulator says that actually that's a good company or we trust that company.
Or we trust that if anything happens, they're going to tell us.
Yes. And you know, even for example, now this would be good for you as a lawyer. For example, if you're helping Ndanu Financial Services to, hallelujah, to open a branch, probably in Uganda. The regulator for that financial service in Uganda will ask for a recommendation from the Kenya regulator. Yes. So if you're not in good books with the Kenya regulator,
you might be denied the Uganda license.
Exactly.
I think about it. Let me try and simplify it.
Yes.
I think about it from the perspective of the way we do our jobs as well. I have learned, and I was saying I've learned so late in life that if anything is about to go wrong in the department and I own that function,
yes,
I am the first to tell my boss. I go and say, hey, there's this contract that you gave me. Things are going sideways. We are not agreeing. This is happening, or I dropped the ball. I missed a clause. We don't have an arbitration clause, or auctioneers have come. They're carrying tables. They hear it first from me. The challenge is, if the auctioneers get to Department X and they start carrying tables, and the HOD for Department X calls my boss, my boss will be more upset.
It's true.
But if I have called my boss, by the time they get there to carry the tables, 2 things will happen. Either my boss and I will be there to say, okay, don't carry tables, you can do A, B, C, D, E. Or when the phone is picked up, my boss will be like, yes, I have spoken to Ndanu and we are over it.
Yes.
Like we are all over it. It's things are going to be good. We'll try and sort it. Sometimes I'm sure like, let me get in trouble by telling my boss first. By the time the rest of you are coming to tell my boss, he already has my version of the story.
Yeah.
He already knows me. And more often than not, you want to be at a place where the regulator or the person in authority is thinking, this organization or this person is transparent enough to let me know when something is going wrong.
Yes.
So it's easier and better to over-communicate, not just with regulators, even in your job.
Yeah.
It's easier to over-communicate. It's actually one of those soft risk management skills.
It's true.
Yeah.
Yeah. Okay. So thank you. Now, as we wrap up this episode, we're going to look at what are the likely implications of once this bill is assented into law. Yeah.
Okay. I can start us off. One of the downsides for me, I want to start with the downsides. One of the downsides for me is there's going to be a compliance burden on smaller SACCOs. Why? Because 1,000 members. Probably there are SACCOs with 600, 500, 300, 400, and especially those ones that you formed at work.
Yeah.
There's going to be a burden on them to comply with this new regulations.
Yeah.
Again, the other thing about it is we've talked about the financial system that SACCOs are supposed to have to increase accountability. What if we cannot afford or we've not budgeted for it this year or maybe even in the next 3 to 4 years? If it's a mandatory requirement and we are a smaller SACCO with a deposit of something less than 10 million shillings, then how are we able to service that particular investment? So I think it's going to create some sort of burden on smaller SACCOs. But I do like the fact that with a lot of Kenyan laws, there's something called progressive realization of legislation. And if we apply that, and I know that's a human rights aspect, but if we apply that to this, like we don't expect you to have complied by this date, we're giving you a cutoff date of November 2027, then smaller SACCOs wataanza kujipanga and probably get there.
Okay. That's quite interesting. Anyway, should we be advertising business for ourselves? You
Yes.
said it's going to be compliance burden. Like, we can help you to comply.
Please.
Just reach out, DM us.
DM us.
Yeah. So the other thing, probably now that you've said it's going to be a burden for the smaller SACCOs to comply, we're probably going to see consolidation or mergers and acquisition of SACCOs. So probably bigger SACCOs are going to acquire smaller SACCOs, or there's going to be mergers between several smaller SACCOs to become one big SACCO. So probably if there was a SACCO for Ruiru Boda riders, now Ruiru and probably, what's near Ruiru?
Kiambu, I don't know.
It's going to become Ruiru and Thika
Boda rider SACCO.
Exactly, something like that. So there is going to be that sort of merger to ensure that they reach the minimum number of members. And of course, if they didn't have the 10 million capital adequacy requirement, and now SASRA is going to be more strict, that means they need to come together, yes, and merge. Yeah. Okay.
I quite like that now we'll see a lot of mergers. I hope we'll not see mergers and SACCOs running away with people's money.
Yes.
But I do like the concept of mergers.
Yeah.
I think for me, another downside of this is, well, upside and downside. The introduction of a compensation structure in case the SACCOs go down. But then now the downside of it is the cap is too low. It's really, really low, because if I have 5 million in a SACCO and you're compensating me 100,000, it almost doesn't make sense.
I think they've borrowed it from the Kenya Depositors Insurance Corporation, the one for banks. So in the event a bank goes down, if the maximum amount you're going to get from KDIC is 100K. I don't think they've ever revised that amount, unless now if the assets of that bank are sold, then now you're likely to get
something more.
Yes.
But I think the other upside of it is, one, there's some sort of compensation that you'll get. So if I have like 60,000 in a SACCO, obviously I'm going to recover all my money.
Yes.
Secondly is that that we all now know that the kind of like, let me just call it over-regulation that comes with SACCOs then makes it very hard for businesses to go under.
That's true.
Yes.
But, okay, I'm sorry to keep bringing it up. I'm still in pain. Now, the question is, if I had a loan with the SACCO, so a lot of SACCOs give you probably 3 times your deposits. So if I had the 100K as my deposit and I had a loan of 300K, should I be entitled to the compensation?
Probably not. I think they'll do the how much do you owe the SACCO? I think they'll net it off. It's Kenyans.
No, let me tell you.
They'll give you your money.
That SACCO I was telling you, when they were disbanding it, some people who had loans were paid a percentage of their deposits. And some of us who didn't have loans got 0.
Did you know people?
I didn't know people at the time.
Yep.
But you see, now those are the things, because I don't even think we had reached 1,000 members. And that's why when the company went down, it was very easy also for the SACCO
to go under as
well. And that's also, I think, one of the risks that goes with a SACCO that's tied to a certain employer. And we need probably, what SASRA needs to do is to start delinking relationships between the employer and the SACCO. Yes. Because SACCOs that are linked to a certain employer, if that employer goes down or that company goes down, then it means that
the SACCO will go down
with them.
And then, but then there is also the thought when you're starting your SACCO is, we're going to grow beyond those people who just work here.
Yes.
So unless a SACCO is making conscious efforts to grow its membership outside the employees of the company, then SASRA should have a very keen eye and be like, look, this doesn't look like a sustainable financial institution structure.
Yes. Yeah. You need to start looking for members outside. Yeah. Makes sense.
Good. The other thing that I think this law is going to do is it introduces some sort of comprehensive financial structure for SACCOs. Now we are very clear on if the SACCO goes down, where does my money go? In case the SACCO needs to borrow money, then where do they go? I think it kind of adds to what we already have to give us a comprehensive framework for the governance of SACCOs, and this in turn gives some sort of introduction of modern financial safeguards, like the way you're saying we borrowed that from the insurance thing.
Yes, I get. Yeah. Then one of the good things, as we mentioned, opportunities. Here we're just seeing opportunities.
Yes.
What were compliance? There's an opportunity. There's an opportunity for guys for tech.
There's an opportunity for people lawyers who do mergers and acquisitions.
Yes. Opportunities. Yes. So we're also going to see, probably now with the systems coming in, there's probably now going to, the way probably in a certain sector, there's a certain system that's known to be used within that sector. So probably a system like that is going to come up.
Smart.
For SACCOs. Yeah.
Smart.
Guys, you people need to pay us. Tuweke till
hapa. We're giving you gems. Dropping gem after gem. Mavo, tuweke till hapa chini.
Yes. The other thing is probably a bit of competition for the commercial banks. Because now the SACCOs are being allowed into the national payment system. So where you're able to transfer money directly from your SACCO, maybe to pay for something. Yeah. So because now it's like also fintechs now have that opportunity to give the SACCOs that platform.
The platforms, the apps,
where I can be able to pay school fees for my child directly from my
SACCO.
FOSA account. Yes. I don't need to send the money to
a bank or to my M-Pesa then.
Exactly.
Our SACCO has a very nice, we nowadays use USSD.
Uh-huh.
If you want to confirm your balance, you want to remove money from we call it the SACCO wallet and bring it to your M-Pesa. I find it so fancy. Anyway, that's a story.
It's going to be interesting.
It's only going to be more interesting.
Yes. Okay. Then lastly, once these regulations or this act has been issued, there's going to be a timeline for compliance.
Yes. Progressive realization.
Yes. And I think that's what you're saying. The compliance burden on the smaller SACCOs is going to be very heavy. So I think before even the bill is passed, probably the SACCOs should start looking at.
Maybe they've already started looking at how to comply.
Exactly.
Or like looking at the bill. I used to like that in our insurance company that we used to work for, and even with my current employer, is whenever there's a bill, then there's an assessment. You start, if it's something positive, you start working towards that level of compliance. Even if it doesn't come, it kind of improves how you do business.
Exactly. Yeah. Yes. So compliance is not all the time a burden.
Yeah.
Sometimes it also comes to improve.
It's a benefit.
Yes, it's a benefit. It's actually a competitive advantage.
Is it? It is.
I'm going to cut you from this business.
It is a competitive that you need. That you need. You.
Yes, every business needs. Actually, I think from our previous episode, we talked about ethics. And now, even when we are looking at this, as we are wrapping it up, it's just come to mind the way you've been talking about how SACCOs require a lot of trust. Then we need ethical behavior within how it's run, because any financial service is basically a business of trust.
It is.
Yeah, because you can imagine, even with a bank, you've trusted them every month that your salary goes there. Yeah. You have trusted them with your deposits, your savings,
your children's deposits.
Yes.
Like, do you, I don't know if you have that thing. Like for us, when you get to 18, my dad will almost always take you to a bank and be like, this is where you open your account. Yeah. So my younger sister has, I think Diana had KCB. I had Barclays. Then my younger sister also had KCB. He'll be like, we go here.
I joined KCB because my mom was in KCB.
Exactly. That is exactly how financial services work.
Even Kanisa SACCO.
Yes.
I joined it because your
dad was there. And me, I joined Kanisa SACCO because you were there. And now I am in Amref SACCO because Diana is there. And I've introduced my friend. I'm like, let's join Amref SACCO. I'm like, mumeona dividends zangu za hii mwaka. Mumeona.
Okay, actually, that's normally true. A lot of times it's referral.
Yeah.
Yeah. Yes. And we actually need to talk about financial literacy for children.
We do.
At what age do you start to your
and
child?
What do we have financial literacy coaches for children? Aki simkuje.
Yes.
We're shooting our shot.
I think I'm not sure.
Centonomy have something. I saw Mumbus going.
Yes.
The other day.
Yeah, they have something for children.
But I think it's for teenagers. Yeah, I don't know. I think it's for teenagers.
But you can actually start from a very young age. When I was about 6 years old, my dad used to give me 100 shillings on Saturday. So, because 100 shillings is easy to explain to a 6-year-old. So he would tell me 10% is for your tithe. It goes to church. 10%. So 10% of 100 shillings is 10 bob. So I think that's why he was using 100 shillings. And then he would say, so you need to save a third of this. So we had a drawer where I would keep that a third. And then now the rest of the money, I would go buy. Do you remember Bibo?
Yes. Oh my God. I used to love Bibo.
I used to go buy Bibo. That is how my dad started teaching me about money. Yes. So you can actually start teaching your children about money from a very young age. Like, just start talking to them. I thought about it the other day and I was like, he was so smart. 100 bob, because he knew 100 bob is easy to comprehend. Yes. At any age. Really. Okay, so we remove this. Okay. And then we remove this for this. And then we will just put it there. Okay, of course, now later my mom is fancier. She used to bank at the time with Stanchart, and then they used to have these piggy banks. Theirs
For
was
kids.
like a rhino. Yeah, so at some point she brought for us the ride. I think she saw my dad and I were being
You are doing under the mattress banking. From Andanu, thanks. Because
maybe she observed, she's like, hey, wacha nichanue, let me upgrade my people. Yeah, anyway, it was, but and banks used to have a lot of those junior accounts.
they did.
They still do.
They still have, yes. They still
have
do.
them.
There's an ABSA one that I wanted to take for my nieces. I think I'll take them when they come back. I'll take them and be like, okay, so
Now we open an account.
because we put in them, and when you see my reading table, there's 3 piggy banks. One for me, one for Ella, one for Elsa, and then every so often I'll like give them 50 or 100 bob when they're going to school on Friday and be like, go buy yourself something nice. So when they come back, I'm like, how much did it cost?
Yes.
Sometimes they're like, I have changed. They're like, I lost the money. Then sometimes like, I'm so excited. I remained with 20 shillings. They come and they put in the piggy bank. And then we open. So we didn't open in December. We opened this term.
Yes.
So we spread my bed nicely and then opened, and then we were sharing, you get 10, you get 10, I get 20. It was such an interesting, it's interesting to teach children about financial literacy.
Yes, I think that's a very interesting space. Centonomy, maybe you need to start not just the teenagers, but
from a young age.
Yes. Or maybe give us as parents exercises that we can do
with
practical
children.
things that we can start doing with children to teach them about money.
I liked that. I think you should do that one with Sage. Like you get a piggy bank.
Yeah.
And then she puts, and then you put sometimes. Then you said during Christmas we'll open all of us and then we share. It was such a wonderful day, I can tell you.
Oh my, there's a time my folks found my brother and I trying to open
Corruption at such a young age.
we were like preteen there.
Even then, corruption will I'm embarrassed.
I am telling you, parents see a lot of things.
Okay, I know I've seen my nieces try that, but also
I think they're just like, wow, just wow. Like, what was this that is so important that both of you
had to.
How do we open it? And we were so serious, we didn't even notice them catching us. So engrossed in the thing. Oh, anyway, sorry.
We digress. We need to wrap up.
Marvin atasema tape imeisha.
And kama tunamharibia time.
Yeah. So thank you all for joining this episode. I hope you have learned something, and I hope that even if the bill is assented into law, then at least you'll be in the know.
You'll be in the know.
Yeah. And if it's not, at least, well,
again, you'll be in the know.
You'll be in the know. It's
You'll
good
be
to
in the
know.
know.
Just good to know. Knowledge is good. Yeah.
And I think one of the things that would be my takeaways from this episode would be, we look at the law as a tool for enforcement sometimes. And if it's not implemented, then again, we'll be telling the same stories like KUSCCO in the next maybe 3-5 years. We do hope that when the tool for enforcement comes, there's proper implementation. When the implementation comes, our financial systems and structures become better. And the person that is in charge of your money has your trust. That is actually the end game for this bill. We need to be able to get to a place where we're like, I bank with SACCO X or Bank X because I trust that they will protect me and my money, and I'll not wake up one day and poof, the SACCO is gone and my money is gone. Trauma response. No, trauma response. Mav, okay. You need to take us away. Ndanu is having a moment. Ndanu is having a moment.
Please remember to subscribe to our channel. As we said, share with everybody.
Share with everyone. Your friends, your enemies, your lovers, your non-lovers.
Your colleagues.
Your church mates.
Yes.
Your sherehe mate. Everyone.
Yeah. Don't hoard knowledge. Yeah.
Don't hoard knowledge.
So we are at the Rundown KE on YouTube, Spotify, and Apple Podcast, even on our social media handles, on IG, on Facebook, on TikTok. On my personal pages, I'm at Ndanuns Yuko.
On my personal pages, I am at Mihala Barasa.
Until next time,
Bye.